Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bloomberg learns that Donald Trump's team is looking at a slow and steady approach to tariff hikes rather than going all in on day one. US futures and Chinese stocks gain. We will bring you our scoop. And as the clock ticks down towards a TikTok ban in America, Chinese officials are said to be looking at Elon Musk as a potential buyer of the app's US operations. Plus, France's new Prime Minister delivers a crucial policy speech to Parliament today. But will François Bayrou survive where others have failed? Happy Tuesday. So European futures getting a lift. The Asian session has benefited from the Bloomberg story suggesting that the team around Trump are looking at a gradual and moderated approach to tariffs. We'll see how long that story sustains the upside that we are seeing in markets. European futures pointed to gains then of around 0.8%, looking to snap 2 days of losses. FTSE 100 futures currently pointing higher by 0.1% as we continue to scrutinise UK markets and the investor questions about the sustainability of the debt pile here. S&P futures currently looking to add 0.4%. Nasdaq 100 futures looking to gain 0.5%. A mixed close for the US markets yesterday. We had producer prices out later today, and then of course CPI, inflation, that gauge on Wednesday. Let's flip the board and look cross-asset then. A bit of money moving into treasuries as you see a bit of moderation around that story. Yields down 2 basis points on the 10-year at 4.75. The pound at 1.22 after further losses yesterday. Again, we continue to keep an eye on the pound. The story today is more about dollar weakness than pound strength. $80 a barrel on Brent, down 0.5%, but still close to those 5-month highs on the concerns about the impact of those US sanctions on Russian oil. And Bitcoin remains broadly under pressure, 94,807, up 0.7% in the session, but wiping out the gains at least since of about 5% since the start of the year, down about 5% since the start of the year. Now, Bloomberg has learned that Donald Trump's economic team is discussing a gradual approach, as we mentioned, to tariffs to boost negotiating leverage and avoid a spike in inflation. Let's get more from Bloomberg's Bill Ferry standing by with the details of this scoop. Bill, what do we know at this point?
Well, it seems, the big question has been Donald Trump promised a slew of tariffs when he takes office on January 20th. The big question has been how will that come into force? It seems like some of his key aides, including Scott Bessent, his pick for Treasury Secretary, are discussing kind of a metered approach, having some tariffs come into place early on, but increasing 2% up to 5% every month, building pressure on U.S. allies and rivals to change their policies more towards the new administration's liking. Now, this is something that's being discussed among Trump's aides, his key economic aides, but it's not something that they have taken to the president-elect yet. And just in the last couple days, President-elect Trump has rejected a report in the Washington Post that he would implement tariffs only on select national security-related goods or products. So I think what we can draw from this, there's clearly a lot of discussions going on at a staff level about how to follow through on the president's pledges without causing any major immediate disruptions to the economy or spiking U.S. inflation.
Yeah, and the mechanism, the tool with which they would use that and implement that policy approach has drawn some interest as well from analysts. Meanwhile, on the geopolitical priorities of the incoming Trump administration, Greenland and the prime minister of that nation of 53,000 speaking out and suggesting that maybe there's some interest to doing a deal with Trump.
Yeah, I think what we're hearing is, listen, if Greenland can benefit from this increased U.S. interest, that's something that they're willing to talk about. The prime minister said he's particularly keen to discuss mining opportunities for the U.S., a lot of critical minerals there. That is one of the key reasons, one of them, that the incoming U.S. administration has expressed an interest in Greenland. The U.S. has troops there. It has a consulate facility there. I think Greenland is now looking at how can we benefit from this interest from the U.S. That's not saying they're putting themselves up for sale or annexation, but they are trying to find a way to cooperate with the incoming administration.
OK, Bloomberg's Bill Ferris, thank you very much indeed on the Bloomberg Scoop and the details around Greenland as well. Let's get back to the details in terms of the market reaction to the news around the tariff plans being considered at least by key members of the incoming Trump administration team, and bring in the Asian market reaction. Avril Hong standing by in Singapore. We are feeling the effects of this over in Asia.
Certainly, we're seeing that bounce in Asia stock gauge. Chinese stocks are leading the way on the reporting that the Trump team, as you say, is discussing that gradual approach to tariffs. But a couple of caveats, including how we would still need to hear confirmation from the president-elect. That being said, that Chinese stock outperformance is quite pronounced today. We've seen CSI 300 in the last half an hour or so extending gains well past 2.5%. And this is on the day where Japan, I would just like to highlight before we talk more about China, is underperforming. It's playing catch down. Japan's back from a holiday, but the chip shares are also the key drags as the White House has been unveiling these fresh curbs on NVIDIA's AI chip exports. But think about as well how next week the BOJ meets just days after Trump returns to the White House. So there's a bit of cautious optimism potentially in the markets as well. Flip the board. If you take a look at what we're seeing in Chinese stocks today, part of it might be that optimism that a joint briefing between the PBOC and securities regulators might produce positive headlines that drive support markets at least. The other element is just how they've been looking really oversold recently. And this chart, courtesy of MLife's Mark Cranfield, shows you the put to call ratio and how this gauge of market sentiment has been reaching extreme low. So a turnaround suggested against this backdrop. Flip the board again as we see that reporting come through on this gradual approach potentially for tariffs. Where the reaction really has been quite pronounced as well is on FX. And as the dollar falls back, we've seen sharp spikes earlier today, Kiwi dollar, Aussie dollar. One thing is for sure that FX volatility is something that we have to get used to under a Trump administration. Focusing on what we're seeing from the BOJ as well, today there was a big speech by the Deputy Governor Himino. This was seen as the last chance to telegraph to markets a hike next week. Ultimately, he said, yeah, the board's going to be discussing one, but that's very far from actually pulling the trigger. Markets don't seem convinced. We are seeing that bond markets are a bit more convinced, though, eventually of a hike from the BOJ or hikes from the BOJ, and the selling there continues. Also part of the global debt sell-off, the yield on the 40-year hitting levels we haven't seen since its debut. Tom.
Yeah, another superlative for the global bond market sell-off that we are seeing. Avril Hong in Singapore, thank you very much indeed. Let's dive deeper into the US market reaction to the latest Trump tariff report and bring in Bloomberg's Valerie Teitel for a gauge in terms of the market reaction with dollar down, bonds up, at least for now, talking of the global bond sell-off, and equities bid as well. Valerie, does that make sense to you given the reporting?
Look, the conclusion that the market is taking from this leak on gradual tariffs is that it isn't afraid of it. It actually seems to be welcoming it. We're seeing equity markets in the green and the dollar move softer on the back of this leak. Maybe this is the Trump administration floating a trial balloon to the market to see what the market reaction would be to an approach about gradual tariff hikes. I do want to laser focus in more on the dollar because it's very interesting, the backdrop. Yes, we are weaker today, but the bullish sentiment is still continuing. Flip on, we just take a look at how close the dollar is from those all-time highs that we saw in 2022. We are 3% away from that all-time high. And if you just look at how the dollar has reacted ever since that Trump trade started, we're now 8% stronger in the Bloomberg Dollar Index ever since that Trump trade began back in last September. And the positioning, Tom, is still extremely stretched. We flip on, we can look at CFT positioning in leverage accounts, which is another way to talk about how hedge funds are viewing the dollar. We are still seeing very stretched positioning when it comes to those dollar longs from those hedge funds accounts. OK, Bloomberg's Valerie Teitel, thank you very much indeed. Softer dollar in the session today, but expectations building of further dollar strength into the future. Now, Chinese officials are said to be discussing the sale of TikTok's US operations to none other than Elon Musk. The app is set to be banned in the US on Sunday, unless, of course, it's divested
by its Chinese owner ByteDance. The Supreme Court, of course, continues to mull that case, but seems to be edging in that direction. Bloomberg tech reporter Annabelle Drulos joins us for the details. Annabelle, wow, TikTok and Musk, what do we know?
Yeah, it certainly was something it caught a lot of people by surprise this morning, I can tell you, when the story dropped. But this is a Bloomberg scoop. And what we're hearing from sources is that, well, clearly, as you said, we're coming up against that January 19 deadline where TikTok needs to be divested. Otherwise, it risks the possibility of going dark in the US, where people can't access the app to download. They also don't receive any updates to it as well if they already have TikTok. But the Chinese government is thinking, OK, well, what are the sorts of plan Bs, plan Cs in that sort of outlook? And what we're hearing from sources is that they could be looking at Musk's X, taking control of TikTok and then running the businesses together. So it's an interesting outlook, but there is, of course, something in it for X if you think about it. I mean, it's got more than 170 million users in the US, TikTok, and so TikTok could help X the effort to attract advertisers. It's also got an AI company, XAI, that could benefit from huge amounts of data that's being generated. That there, you're taking a look at a post on X from Elon Musk. That was back in April of last year, but he was someone who said TikTok shouldn't be banned in the US given free speech concerns, and that certainly is the argument that TikTok is making, and sort of goes back to what would be the plan A for the Chinese government, and that is absolutely for ByteDance to not need to sell its operations in the US.
I just wonder how much head-scratching there's going to be going on in the halls of power in D.C. I mean, TikTok US said, look, we're not a Chinese company. We have no links to the Chinese government. And suddenly it's all about the Chinese government. What are the owners? What have ByteDance, the parent company, what have we been hearing from them?
No response from them just yet, and I think that also sort of underscores what's another interesting element to this story, because it's actually not clear how much ByteDance really knows about these conversations that are taking place in Beijing. And even if Musk, if TikTok, if ByteDance, if all of those groups have got together to even start to think about this being a possibility, Beijing still has a very big say in this, and there's a couple of different things we can think about here. The Chinese government holds a so-called golden share in a ByteDance affiliate in China. That's Douyin, which is the TikTok equivalent in China. ByteDance would say that golden share only applies to Douyin, but of course the Chinese government might say otherwise. But essentially, a golden share gives Beijing a large amount of influence over the company's strategy and its operations. And aside from that, China does have export rules in place that prevent Chinese companies from selling certain software algorithms, and that's what's really integral to TikTok. So definitely China is going to have a say in what happens next if that does include a divestment. But again, to reiterate, that's not what China wants to see, and that's not what ByteDance wants to see either.
OK, well, we'll see how this unfolds, but it's an interesting twist, isn't it, in this story as we count down to that Supreme Court decision ultimately on the fate of TikTok US. Bloomberg tech reporter Annabelle Drulos with the context. Thank you. And staying on Musk, the EU is considering expanding its investigation into whether X broke content moderation rules. Elon Musk's social media company is accused of failing to tackle illegal content and disinformation. The Commission's top digital official told Bloomberg that they are also looking at whether a live stream conversation between Musk and Germany's far-right leader gave a political candidate an unfair advantage.
With X, the investigation has been already going on 1 year. And it's quite broad, the scope that Commission is investigating. And now we are currently assessing that if the scope is large enough, also when it comes to these upcoming German elections, we are covering already all the risks on that.
OK, so the European scrutiny on X and Musk continues. Let's have a look at what else is on the agenda for today. 11 a.m. UK time. We're going to get details from the US NFIB small business optimism gauge at a time, of course, when we are assessing the strength of the US economy. And that is certainly one of the factors leading to the sell-off broadly in these bond markets. 1:30 p.m. UK time, meanwhile, tying into that story, it's US producer prices. Bloomberg Economics expects strength there. Certainly no confirmation of disinflation. That is the view from Bloomberg Economics as we look ahead to producer prices later today. And at 2 p.m, there will be a push to lay out the new policy agenda in France as well from the French Prime Minister. Speaking of which, coming up The French Prime Minister is set to present his policy agenda to Parliament. We are going to look at whether François Bayrou can succeed where his predecessor failed. This is Bloomberg.
The red line is to choose to come back on the pension reform and to increase tax. We need to cut spending, and everything that we hear now that is shaped in the public debate is increasing tax, having super tax on the corporations, having tax on household, on the airlines, etc. And this is not the good way, because the problem that leads us to that point is an excess of public spending.
And that was Fabrice Le Sachet, Vice President of the French Business Union, MEDEF, speaking to Bloomberg there. The French Prime Minister, meanwhile, is due to present his policy agenda to Parliament this afternoon. François Bayrou faces tense discussions, inevitably, of course, on this year's budget, with France relying on special laws to keep the government functioning until they get that budget across the line. Let's go live now to Paris and Bloomberg's Caroline Cornat, who is on the ground for us. Caroline, what can we expect then from the new PM's policy speech today? How consequential will it be?
We'll hear about immigration, about the pension reform, and of course about this budget that the new Prime Minister, François Bayrou, has promised he should deliver by around mid-February, which is quite ambitious given we're already mid-January. And remember, of course, his predecessor, Michel Barnier, was toppled by a motion of no confidence early December on that same issue of the budget. So this is the second general policy speech we hear from a different prime minister in France in just 3 months. The novelty for François Bayrou is a change in method. At least that's what he's trying to show, because he wants to appease the tensions with having the center-left, the socialist parties, on board. So over the past week, the new finance minister, Lombard, has met with all the parties, including the socialists, the communists, the Greens, not the far left of Jean-Luc Mélenchon. They're trying to find a compromise, and we actually heard from the head of the Socialist Party, Olivier Faure, last week, saying there was some kind of progress and he was perhaps ready to compromise. But compromise on what? That's the big question. The Socialists and the Greens actually would like to suspend the pension reform. Remember this very controversial 2023 pension reform. That's something that François Bayrou is not ready to do quite yet, because he doesn't want to lose the support of the center-right Republicans. So today he should remain vague about this pension reform. He doesn't want to use the word suspension. He's looking for a different word, and he has no interest, of course, in making big announcements today, because a possible motion of no confidence, the highest risk, is not this week but next month on the budget.
So, Caroline, how different is this government of Bayrou? You've been talking about the outreach there, at least to most parties, apart from the party of Mélenchon. And bottom line, what are the chances that they actually succeed and get this budget passed?
It's actually doesn't have better chances necessarily than Michel Barnier, because, of course, the parliament is still fragmented in 3 blocks. And President Macron, as you know, cannot call new snap elections until at least July. So we're going to see this parliament being fragmented over the next few months. Marine Le Pen, the head of the National Rally, still has the upper hand. Of course, unless François Bayrou manages to secure some sort of pact of non-aggression from the Socialist Party. That's what he's trying to do on the budget. That's what he's trying to do with this pension reform. And with the new finance minister, Lombard, we actually have someone with more experience, someone who's considered actually quite close to the center-left. Even though we don't have much details yet about this new budget, he was talking about a spirit of responsibility when he met with all the parties last week. We know he wants to bring bring the deficit down to between 5 and 5% of 5.5% of GDP for this year, which is a target that is lower than his predecessor. He wants to make about 50 billion euros of savings, which is also lower than the 60 billion euros that Michel Barnier was talking about. We don't have much details yet on whether there will still going to be this super tax on the profits of the biggest companies. We'll see the discussions over the next few weeks, but the Bank of France last night actually warned in their monthly survey about this political uncertainty still weighing heavily on businesses, as we heard at the beginning of this segment from the MEDEF VP Fabrice Le Sachet, and warned about, how long this uncertainty is going to last, the urgency of passing this budget. We had zero growth in the last quarter of 2024, and the Bank of France still expects very sluggish growth in the next couple of quarters.
OK, Bloomberg's Caroline Cornat in Paris. Thank you very much indeed as we look ahead to the preview from the Prime Minister and that speech later today. And, of course, the politics of France, the uncertainty has weighed on the bond markets there. But we have a similar story, different dynamics, but similar pressure, of course, on the bond markets of the UK. You can find out how the UK bond markets could impact personal finances, your own finances, at a live Q&A on Bloomberg.com. That's today at 12 p.m. London time. Bloomberg reporters will be breaking down the implications then for UK mortgage rates and savings, the stock market and more. Terminal clients and digital subscribers can log in and can put questions directly to the team. Coming up, we're going to switch focus because California's Governor Gavin Newsom wants an additional $2.5 billion of state spending to aid the emergency response in Los Angeles. We're going to get the latest on the wildfires. That is next. This is Bloomberg. Welcome back. It is Tuesday, January the 14th. Let's get you up to speed on some of the other stories making news today. Southern California faces another round of dangerous fire weather, even as crews struggle to contain wind-driven blazes that have paralysed Los Angeles for nearly a week and killed at least 24 people. The disaster is expected to be among the costliest in US history, with estimated damages and losses between $250 and $275 billion. Bloomberg's been told that Cleveland Cliffs and Nucor are looking at a joint offer for US Steel. The Cliffs CEO confirmed his interest at a media event and later told Bloomberg he'd fund the deal using debt. A source says the partnership could include Cliffs acquiring most of US Steel, while Nucor took its mini mill assets. And Goldman Sachs has promoted several key executives and combined teams to form a capital solutions group. The move recognises the growing importance of private markets and giving a path forward for more of its emerging talent. Chief Executive David Solomon says the restructuring reflects Goldman's desire to operate at, quote, the fulcrum of one of the most important structural trends taking place in finance. Coming up, Trump's economic team is said to be discussing a gradual approach to tariffs. We're going to get the market reaction analysis. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bloomberg learns that Donald Trump's team is looking at a slow and steady approach to tariff hikes rather than going all in on day one. US futures and Chinese stocks rally. We're going to bring you our market-moving scoop. And as the clock ticks towards a TikTok ban in America, Chinese officials are said to be looking at Elon Musk as a potential buyer of the app's US operations. Plus, France's new Prime Minister delivers a crucial policy speech to Parliament today. But will François Bayrou survive where others failed. Let's check in on these markets then. There's a decent rally coming through across the Asian session, and the handoff is there, the setup for European stocks. European futures pointing higher after 2 days of losses, and seemingly on the back of this Bloomberg report that the Trump administration is considering a moderated and gradual approach to tariff implementation. European futures then up 0.7%. FTSE 100 futures pointing to modest gains of 0.1% as the assets in the UK remain under scrutiny. S&P futures stateside looking to add 0.3% after some modest gains for the S&P yesterday, though tech stocks on the Nasdaq 100 did fall by about 0.3. Nasdaq 100 futures now pointing to gains of 105 points. Let's flip the board and look cross-asset. You've seen a bit of money moving into US Treasuries, at least for now, and the Bloomberg Dollar Index is softer. 10-year yielding 4.75 stateside. The pound remains in focus after dropping again yesterday. 122, gaining modestly today. That is more about dollar softness than pound strength. Brent at $80 a barrel, currently down 0.5%, and Bitcoin at 94,752, currently up 0.6% for the cryptocurrency. Let's get more then on the market reaction right now. Bring in Freya Beamish, chief economist at TS Lombard. Freya, I talked to you in the break about how we're going to start on the 5% yield story, but in fact I want to start with the tariff reporting. And we'll get to the 5% yield conversation and the global bond sell-off. What do you make of the news around moderated and gradual tariffs? You've been building assessments into your expectations, your forecasts. If, and there's still a big if that is the approach that the incoming Trump administration takes, to what extent would that change your views in terms of the inflation impact, the impact on the global economy?
Yeah, if they go for the gradual approach, I think we always thought they would go for the gradual approach. We just didn't know if they would sort of fess up on that at the get-go in sort of this month. I think if they do go for the gradual approach, that's very, very positive for markets. It gets us out of this dynamic that markets have sort of been tending towards in December and January. With tariffs and deportations, the risk is that you're injecting, that the administration would be injecting these negative supply shocks into the economy. And so far, markets have been focusing until December very much more on the demand side, the positives for the demand side, and sort of neglecting the negatives for the supply side. I think what happened in sort of December and early January is that markets started to think, actually, to negotiate, you do have to make some noises on tariffs in order to bring parties to the table. Maybe the sort of the legislative agenda, the use of tariffs for fiscal policy. These are all things that make things make the outlook quite different from the first kind of Trump presidency. That's a real kind of key difference there. So markets starting to take that more seriously. And if you have these negative supply shocks, that's when you have the problems with term premia. That's when you have the problems with like positive correlation between equity markets and bond markets. And it's really a very difficult trading environment. So that would change things quite significantly if we move to a gradual implementation.
OK, interesting. I mean, we've seen the grind higher in yields, of course, the global bond market sell-off moderating to some extent modestly today. You've had a call out for 5% on the US 10-year for some time, Freya. What do you put the catalyst down to now? And if we get to that 5%, do you expect to see buyers at that level?
So the 5% is a secular call. It's composed of 3% inflation, 1.5% for real rates, and term premium in that case is actually only, and I put only in inverted commas there, 0.5. But I think we could actually see term premium in the current environment gradually kind of grinding higher. If we get this news confirmed of a shift towards a gradual approach for tariffs, I think what that essentially means is that tariffs are being sort of kicked into the long grass, and I do think that other countries will respond to those threats. So maybe the tariffs don't prove necessary further down the line. Nevertheless, when you stack up the shifts in the real economy, these kind of secular trends, it does look like 5% at least actually is the secular kind of resting place for bond markets. So it's just a question of, do you get a tactical long on this news, on kind of pushing tariffs into the future, if that's confirmed when Trump comes in.
high yields, 5% is the resting place, maybe for the US 10-year. We see the linkages with the gilt market here in the UK, with our own idiosyncratic issues as well, of course. But you push back, Freya, on the idea that this is a Liz Truss moment here in the UK.
Yeah, I think the actual budget itself is very different from the kind of the Truss-Kwarteng budget. There's a lot of talk about sort of this is going to be an inflationary budget because of national insurance contributions. That's not systemic inflation. That's not really something that should be changing the 10-year or the 30-year in the gilts market. Instead, what was done was to change the fiscal rules in order to preserve the ability of the government to invest in the supply side of the economy, which has been very sort of has seen underinvestment for a long period of time. And in fact, again, turning to those kind of negative supply side shocks, it's the inability of the supply side which creates the inability of the supply side to respond to the demand side that creates the positive correlation between bonds and equities. You can think of it almost as the hedging capacity of the bond market is reduced by a negative supply shock because inflation is coming into the system, which is bad for bonds, and destroying demand, which is bad for equities. So you have everything going in the same direction and in the wrong direction. If the government is trying to sort of preserve the supply side resilience, then that should actually be good for preventing term premium from rising. But that's not what we've seen in markets. And that makes me think that this is a little bit sort of politically driven. It's a little bit psychological, and it could sort of unwind.
Very interesting. Yeah, the market's pricing in fewer than 2 25 basis point cuts from the Bank of England through this year. You see that as overly hawkish at this point?
Yeah, I think we should listen in this case to what the Bank of England is saying itself, and that actually the inflation that people are worried about is not a systemic inflation. This is something that's sort of working through the system. The way in which we sort of differ from the Bank of England in terms of understanding inflation is that in this case, I think inflation is actually the solution to the problem rather than the problem itself. Inflation is the equilibrating force in a labour market that does require rebalancing, and that supply is actually coming back online, whether that's through immigration or through sort of other means there. And so the inflation should kind of work its way through the system, and the type of inflation that people seem to be worrying about in the media is the wrong type of inflation to be worrying about from the perspective of bond markets. I think the Bank of England can and will need to cut by more than markets are expecting at the moment. And similarly, if the gilts market rout gets out of hand, the Bank of England will step in terms of the size of its balance sheet, just as it did in the Truss-Kwarteng episode, and that proved effective. So I think this should prove effective at this stage as well. And I think QT is probably on its last legs as well.
OK, very interesting. QT on its last legs, maybe a slightly more benign inflationary picture than maybe some have suggested, and more cuts in the pipeline for the BOE than maybe traders are expecting. Freya Beamish, Chief Economist at TS Lombard, always smart in terms of the insights this morning. Thank you, Freya. To the European Union's top digital official now, saying that the repeated cutting of undersea cables in the Baltic Sea cannot be fully accidental. We're switching focus now to some of these geopolitical tensions and maybe the role of Russia, alleged at least. Virkkunen says the bloc needs to be ready for a range of hybrid threats. She also told Bloomberg's Oliver Crook that the EU is looking forward to working with the new US president.
Of course, the USA is the most important ally for European Union when it comes to security and also for the economical side. So also at the same time, our sovereignty of our member states, of course, has to be respected. But USA is a very important ally for European Union as well for Denmark. So we are very much looking forward to cooperation with the Trump administration.
One of the things that we've seen a lot of over the last few weeks and months has been damage to undersea cables. I'd like to get an update from you on kind of what we actually know about what has occurred. Or can you establish definitively that this has been sabotage? Do you know who is responsible for it? I know this is going to be a focus for you this week at the Baltic Summit.
Yeah, when it comes to these incidents in Baltic Sea, the Finnish authorities, they are currently investigating this, and they have been working very efficiently. But we will gather together with 8 Baltic Sea countries and with NATO and EU on Tuesday on Helsinki to discuss about these topics, that how we can better prevent and detect and also respond to that kind of incidents. And of course, it can't be really by accident if these are happening many times a year, that oil tanker is navigating anchor on the bottom of the sea and digging the critical infrastructure up.
Yeah, and I think that I wonder if what you think about this. I mean, because of the war in the Ukraine, the horrors that we've seen in Ukraine, and also, you know, in the Middle East, I think there's a bit of a distract. We've been a bit desensitized. If this was happening when there wasn't war around, I think Europe would be much more concerned. Do you think we're already basically in Europe in hybrid warfare with Russia?
It's for sure that we have to be prepared for very different kind of things and different hybrid threats. We have seen that nowadays everything can be weaponized, like migrants. We have been seeing weaponization of migration on our external borders. We have been seeing foreign interference to elections and also damages and sabotage of the critical infrastructure. So it's for sure that Europe has to be better prepared also in the future.
And that was Hanna Virkkunen, the European Commission Executive Vice President for Tech Sovereignty, speaking to Bloomberg's Oliver Crook on the ground, of course. Oliver Crook will also be speaking to the EU's Climate Commissioner, Wopke Hoekstra, and the High Representative for Foreign Affairs, Kaja Kallas. Catch those interviews here on Bloomberg TV tomorrow. Now, GSK is looking to do more deals as it doubles down on its return to cancer medicines. This after the British drug maker's agreement to acquire IDRX for up to $1.15 billion. The CEO, Emma Walmsley, spoke to us at the JP Morgan Healthcare Conference about vaccines and the new US administration.
Obviously, there's a lot of commentary on what the new administration's approach to vaccination will be. I think we should wait and see what the facts are when they come through. But any conversation about the efficacy of vaccines, the quality of vaccines, these are things my company is deeply committed to and we want to engage on with transparency.
Spain, meanwhile, is proposing that non-EU residents pay a tax of as much as 100% for home purchases, a move that could particularly affect buyers from the UK and Latin America. Prime Minister Pedro Sanchez says non-EU residents bought some 27,000 properties in Spain in 2023, contributing to a housing affordability problem. The government's proposals are inspired by tax regimes in Denmark and Canada. Coming up towards a lingua franca, we speak to DeepL, an AI language platform that enables more efficient communication across markets, has a valuation of around $2 billion. We discuss that next. The CEO will be on. This is Bloomberg. Welcome back to technology now, where European AI startup DeepL is planning to push further into language translation this year. After raising around $300 million in 2024, the German-headquartered firm, now valued at more than $2 billion, describes itself as, quote, the world's most accurate translator, taking on the likes of Google Translate, going toe-to-toe with that business. The company says its products, including text and voice translation, make it easier for global companies to operate across markets. Very pleased to say I'm joined now by the CEO and founder of DeepL, Jaroslaw Kutylowski. Jarek, thanks for coming into the studio. So it was a really big year for you and the team last year. What is 2025 looking like? How much product are you going to be shipping? Are you seeing any moderation in demand for the services and products that you ship?
Tom, thank you for having me. 2024 was actually quite a big year. We've launched 2 big products, and what we're going to be doing right now is really iterating on those and making sure that the quality, the accuracy of the translation and text generation that we're doing in DeepL, right, that this actually comes to a level, comes to the next stages of quality. That is something that's really so fascinating about tech. You launch a product, but you still got to work on that all of the time and make sure that your customers get the most out of that. And in translation is something that companies really can see as their lifeblood. Communication is extremely important, And in this global framework where most companies are operating, translation is part of communication. So having the best tools available for that makes really a competitive advantage for them.
And you work with a big slice of the Fortune 500 companies. To be clear, in terms of the demand, what are you seeing last year compared to this year? Is the demand picking up? Is it moderating?
I think the demand is changing a little bit. I think everybody is getting a little bit more sensible about AI. That was a big point of the latter part of 2024, I would say. A lot of companies are coming out of this first hype cycle and assessing how do AI solutions help them. I think with translation it's a little bit of a different space because it's been around for quite a few years already. Translation was one of the first really ways of how AI could be applied in a way that really shows an ROI, and therefore we don't see that much of a moderation there. I think this whole field of AI is still a little bit uncertain, but it becomes more and more specific, and people are starting to understand how to pick solutions there and how to or like what to judge those solutions on.
Yeah, and just in terms of the context of that hype cycle, I mean, you guys you were founded in 2017, so well before the launch of ChatGPT, of course. What do you, in terms of the competitive threat, do we get to a point where OpenAI, where Anthropic, where Google, where those big foundation models just basically end up eating your lunch? How wide is the moat that you have right now?
Yeah, I think there is a lot of solutions on the market which are mostly kind of targeted towards the consumer kind of usage, and these are the big platforms providers that you've been talking about. I think translation for businesses is something different. What you need for businesses is a translation that is not only highly accurate, but that also has all of the security guarantees that you need, and then really adapts itself to how the company speaks. You don't want basically your translations to sound like anybody else's. You want your own language to be really fully represented in everything your employees communicate across the world, and that's a place where really specialized solutions like ours really come into play and are still very, very important.
US is clearly a big market for you. You opened a hub in New York. Is the whole the view or the take that Europe is losing the battle for AI? Is that overplayed? I mean, you've raised $300 million. You're based in Cologne in Germany. You're valued at $2 billion. You're very successful. Mm-hmm. Does that suggest that maybe we're overplaying this, or is there still a massive gulf that you see?
Tom, I'm a scientist, so I'm going to look at the numbers and I'm going to say yes, definitely. There's more AI solutions being created in the US, and that's just a fact. I think as Europe, we should be confident about trying to build more and building. And like us as a company, we're doing that, of course. And I'm super happy about seeing other companies and also trying to foster that environment happening in Europe. So we shouldn't be selling ourselves too short. But would
you IPO in Europe?
I'm not thinking about IPO right now, so I don't know, honestly.
Should my kids be learning a language?
Oh, totally. I think it's a great experience for them. It's something that really is going to teach their brain on how to really think in different cultures and in different ways. But also, as far as I'm super enthusiastic about AI and its role in translation, especially when it comes to business, there's always the part of where you want to go to a country, you want to experience the culture, and it's just so much better if you can speak that language on your own.
Where is DeepL in kind of 5 years? In 5 years' time, where do you see the business in terms of your ambitions?
Yeah, we want to be the language player for the global enterprise, for the global business. We already have captured quite a large portion of the Fortune 500. As you mentioned, we're being used by 80% of the companies on the Tokyo Stock Exchange. So really a large footprint there. And like every time somebody thinks translation and international communication, I want them to think about DeepL.
Okay, and you're working quite closely with NVIDIA, always in the headlines, of course. You're building out a supercomputer, which encompasses a lot of their hardware, their infrastructure. How important is that for the business? And in terms of your ability to continue to spend on CapEx, is it a headwind potentially into the future?
I mean, DeepL is an AI native company from that perspective, that we've been researching our own solutions and kind of building the models on our own since the inception of the company. And therefore, hardware was always an important part of our overall strategy. We've been building our first data centers in 2017, and that doesn't change.
Are you worried about the cost of compute?
I mean, that's part of our business. And definitely something that we have to put into the business model and see how that works. And these costs are obviously rising as models are becoming larger. But I think it's not a law of physics that those models are going to become larger. And we're working very hard also making sure to see, is there ways of doing the same with less compute and building something more efficiently.
Okay, Jarek, thank you so much for coming to the studio bright and early. Jaroslaw Kutylowski, the CEO and founder of DeepL, on a big year back in 2024 and expects an even more significant year in 2025 for that Cologne-based business with global ambitions, of course. There's plenty more coming up. Stay with us. This is Bloomberg.
In that kind of environment, I still think you're likely to get a couple of cuts. But clearly the FOMC is in no hurry. And therefore we think it's probably going to take until later in Q2, maybe the June meeting, for the first cut to be delivered.
Goldman Sachs chief economist Jan Hatzius is there with his views on the Fed and expectations that they still come through with 2 cuts through this year. Part of the expectation, of course, the analysis will be based on that inflation data. We get producer prices out later today, then CPI, of course, on Wednesday. Producer prices expected to continue to hold at around 0.4% is the estimated increase for producer prices. Bloomberg Economics says the headline rate will be lifted by higher energy costs, also potentially higher costs within financial services, given the equity rally towards the end of last year. They say at Bloomberg Economics that the data today from producer prices will not do much to assuage the Fed that they are on a path towards disinflation. They say that's not likely to come through from this data. Bloomberg Economics and their take. Let's flip the board and have a look in terms of what higher rates means for the earnings story and particularly the lens on big tech. Because in fact, the expectation, the view that in terms of the valuation squeeze from higher rates on tech, if you strip out some of the smaller names, some of the bigger players are actually making money in this environment, benefiting from higher rates, including the rise of Amazon, but also as well Tesla. That analysis is coming through on the MLive blog. It's worth looking at in terms of some of the upside for big tech on higher rates. Coming up, the pulse of the opening trade is actually first, but we'll also be hearing from the CEO of Legal & General speaking to Francine Lacroix on the pulse. Before that, though, it is the opening trade. Stand by for plenty more. This is Bloomberg.